September is Life Insurance Awareness Month, and here at Hugh Miller Insurance, we thought we'd kick that off by answering some questions that you posted on our social media outlets.
We'll be answering your questions on a two-part video series, and at the end of the second video we will do a drawing of the names of the people that ask questions on our social media posts for a chance to win a gift card. Well, our first question comes from Lindsay Deaver, and she asks, would my loved ones still qualify for life insurance if they have past medical history? And to answer that question simply would be yes, absolutely. You would still qualify for life insurance. The amount of death benefit that you qualify for and your rates could be limited based off that medical history, but you would still qualify. And at the end of the day, we do have a guaranteed issue product that we use, and everyone qualifies for that. So to answer your question, Lindsay, that would be yes, absolutely, they would still qualify for life insurance.
All right, our next question comes from Regina Frank. Is life insurance a good investment for retirement, and when should I start? Life insurance is a very good investment for retirement. It builds cash value. Those cash values can be guaranteed. Also, what's nice about life insurance is it is not affected by the daily ups and downs of the stock market. As long as you have a financially strong company, life insurance can be a very good vehicle for retirement.
Yeah. So our next question comes from Jennifer Massini, and she asks us, what is the difference between whole life insurance and term life insurance? And this is probably where Mike and I start first with a client that is asking about life insurance. And probably the most simplest way, I think, to understand whole life insurance versus term life is whole life is permanent insurance. So I like to look at it as whole life insurance is like owning a house, and your term insurance is going to be like renting a house. With a term life policy, it definitely is beneficial because you can get a large death benefit for a small premium, and you'll have that set premium for the length of the term. So, for example, if you had a 10-year term for $200,000, you would have, for 10 years, your premium would be the same, and you would have that $200,000 in death benefit. And then after that 10th year, your rate would be able to go up, or that term would be convertible before the 10th year was up. With whole life insurance, you'd have that rate and premium, and from day one to the end of that policy, to however you wanted to structure that policy, that premium is going to stay the same, and you own that policy. That policy is also going to build cash value. So there's a little more bang for your buck there with the whole life product, but that is probably the easiest way simplest way to explain the difference would just be renting versus owning.
Okay, so that concludes the first video of our two-part series to answer your questions on life insurance. Look in the next couple days for the release of our next video.